Hey everybody, we are going to do a Chapter 1 practice problem together. This problem will help you get ready for the Chapter 1 case study and just help with Chapter 1 in general. So I'm starting with the Chapter 1 case study template file. This is the file that you pull up when you're ready to work on your Chapter 1 case study. It's a blank template file. It's here for you to fill in for the Chapter 1 case study. Now we're not going to do that problem right now, we're going to do a different one. So I'm going to change this. We're going to do the Chapter 1 AP 14A problem. And that is on page 16. So you're welcome to open up your page 16, or you can just keep listening and following along. Let's see, can I just move me? Yeah, let's get rid of this. We don't need any of this stuff. This has to do with the case study. Yep, that's pretty much what I look like. That's a picture of me in a WA classroom. Happy little accountant teacher girl. That's me. Alright, so we got this set up, and I'm scrolling down, and we can get rid of that too. That's case study. Now, I'm going to page 16, and I want to check out this problem. I see opening balances. Alright, we got to do something with that. And I see 5 transactions, and we got to do something with those 5 transactions. Then I'm looking at page 17 for the, like the paper fill in the blank, version of what we're doing in Excel. And I'm just kind of scanning it. Like I see 4 assets, I see 3 liabilities. I don't think this one's that big. Yeah, it's not. So I'm going to insert some rows. So I'm going to click and drag, right click, insert. Then I can add some more accounts. So that gives me 1, 2, 3, 4 assets. Yep, and I need 3 liabilities. Okay, so I'm going to need some more liabilities. That one looks kind of big. I'm going to be careful about how I copy this one down. Yeah, I don't know how much space I've got there. Yeah, that looks pretty good. Oh, it didn't work the way I wanted it to. Let's try this. There we go. And 1 more liability account. Okay, so what I'm doing is I'm taking this Chapter 1 case study file and I just modified it to use it for a different problem. That's what I'm doing. And I'm going to keep modifying. All right, let's do the opening balances. So I'm going to page workbook page 17. I'm checking out the opening balances, and the first one is cash, $18,000. So I got cash, opening, $18,000. Oh hey, see this 4 and the 1,500? Yeah, we got to get rid of that. That's the case study. I gave you one in the case study. I gave you a starter one. See if there's anything else. No, I think we're good now. I think I've gotten rid of all of the Chapter 1 case study stuff. Okay, so we got opening cash is in there. Notice that it's on the left side. And notice that cash says increase plus sign left side. So assets are left side accounts. They increase on the left. You could think of liabilities as kind of like the opposite of that. Liabilities increase on the right side. So this whole accounting system is about balancing out left and right. It's kind of like a self-checking system for recording information. It was developed, we really don't know exactly when it was developed. It became popular after the printing press in, like around Leonardo da Vinci time frame. There was a man named Luca Pacioli that popularized the accounting system. Exactly, the same thing, we've been using for hundreds and hundreds of years now. Same system, but it was being used before that. It's just that at that time then we had the printing press and information about it. So assets left side, liabilities right side. And then here we've got revenue right side, expenses left side. And then as we get going, and we don't see a whole lot of this in Chapter 1, but this net worth is going to be called capital when we get to a business, and it's a right side account. and then there's going to be an owner withdrawal account, and that's going to be a left side account. So this whole net worth gray equity section, we're going to do more and more and more with that as we get going with the class. Okay, so back to opening balances. Cash, $18,000. The next one is furniture, $3,100. $3,100. And I'm going to go ahead and change this and match it up so it says furniture. So then it agrees with this problem. Asset, left side, yep. The next one says valuables and electronics, $3,200. Okay, so that's going to be the next one. Valuables and electronics. Okay, there we go. And the next one says house. House, whoa, $255,000 for this house. Not shabby. Okay, copying and pasting that opening down there and typing in house. I'm going to look at my assets. I got cash, furniture, valuables and electronics, and house. I got my 4 assets in. Nice. Excellent. Very good. Okay, the next one in the opening balances is student loans. So what I want you to see as you're going through this list is, oh, that sounds kind of different. And it is. So the 4 assets were all together, and now we're going to shift gears. And now we've got a student loan. So chapter 1 is all about an individual person, like, you know, you and me. So I wish I had a $250,000 home, but I'll pass on the student loan part. No, seriously. So student loan is liability. You know, it's debt. So this person has student loan debt. Debt is liability. Liability is debt. Debts and liabilities are balances that you owe. So here we see that right here, you know, in this area. And I love AIM in their colors. So here we've got red for liabilities. So instead of unpaid liabilities, I'm going to change that to student loan. I think I'm going to call it debt. I like that. I mean, to me, that's a little more complete. In the book, it just says student loan. Student loan debt. And the opening balance is, okay, hold on to your hat, $39,000. Well, that's paying for the big house, right? I don't know, something like that. So student loan debt, $39,000. The next one on the list is family loan, $2,000. Okay, family loan. Again, I'm going to throw in the word debt, $2,000. This means this person owes somebody $2,000. Just like it sounds, family loan debt. This person, say, borrowed $2,000 from grandma or whatever. It's debt. It's a liability. This person owes somebody else $2,000. And the next one is mortgage. Well, I would think this would be pretty big, that big fancy house. Mortgage, I'm going to call it loan debt. Mortgage, and the balance is $100,000. That's not very much, really, on a house that big. And that's it for liabilities. So we've got 3 in this red category: student loan debt, family loan debt, mortgage loan debt. All debts, all liabilities. These are all amounts that this person owes, balances due. If it's short term, it's due right now. Like, I went and I charged gas on my credit card, and I'm going to get that bill and it's due now. As opposed to my car payment, where I bought a car and I'm making payments on my car and I'm going to pay it off over time. So there's short-term and long-term debt. This first one, student loan debt, that's going to be a long-term one for sure. You know, payments, monthly payments over a long period of time. This family loan debt, who knows? I mean, hopefully, you know, they wrote something down, note to self, if you ever borrow money back and forth between the family, you know, rip out a piece of notebook paper and write down what, you know, what your agreement is and sign it. It'll save some headache. So in this case, we don't really know short-term, long-term what, but I'm guessing no monthly payments. It's just going to get paid back at some point. Mortgage loan payable, that's another long-term one. So that takes care of assets and liabilities. Next on the list is net worth, $138,300. And I'm coming down here, $138,300. Opening balance, net worth. Notice it's on the right side. And there's an equation, right? Do I have room to put it up here? Sure. Assets equals liabilities plus equity. Balance sheet equation. Assets left side equals right side liabilities and right side equity. Equity is net worth. So we are good to go. We've got all of our opening balances in there. I would love to do one more thing. I'm going to take, well, I'm just going to scroll down for a minute. Assets equals liabilities plus owner's equity. What do we have in assets? A little practice with Excel too. I'm going to use a formula. What's our total in assets? We've got 18 plus, we got this one, click on it, type plus, this one, type plus, click on this one, and enter. I've got $279,300 in assets. Okay, what about liabilities? So I'm typing equal sign first. And I've got this one, plus this one, plus this one. Notice my formula up here. I'm typing equals, click, plus, click, plus, click. I'm clicking right on the cells. Enter to lock it in. So I've got $141,000 in liabilities. Equity equals, I'm just going to click on that number. Notice I'm not typing that number again. This is called a cell reference. Equals, click on that number. And then I'm curious about, does this little formula work out? So how much is total assets? Well, that's the same thing. And how much is liabilities and equity? Okay, that's going to be that number plus that number. Hold your breath and you hope that it balances out. So we know that our beginning balances are okay. This was like a little test on beginning balances. So that's what this little thing is down here. Just a little more discussion on left, right, the balance sheet equation, proving that those beginning balances are good to go. All right, we're going to move on to, I'm going to leave that there. We're going to move on to some transactions. There are 5 transactions for this problem. You're probably more experienced with these videos than I am, but you can stop anytime you want to. We just did the opening balances. This would be a good time to stop, take a break. You can go back and listen to things again, all that good stuff. Okay, transaction 1. Actually, let me say notes. This is going to be my notes section. And I'm going to read transaction 1 to you. If you're using the workbook at the same time, page 16, that's even better. You can read along with me. Transaction 1 says $350 was taken from the bank account for a car lease payment. Car lease payment, $350. So I'm not typing out the whole thing. I'm just trying to get a little chunk of it over there so we have something on the screen. Okay, car lease payment. So does that make you think of anything? Car lease payment. Payment. Hey, stay with the word payment for a minute. This person paid $350. Payment. Paid $350. That's paid cash. So we know that we're going to do something with the cash account because of that word payment. Payment means paid cash, used cash, decreased cash. So we're going to be right here. And we're going to put a little 1 right there. And yes, that little number 1 is important. That way you've identified this $350, where it came from, that kind of thing. Okay, so we paid cash, decreased cash. Yeah, I get it. Also, note that cash is not necessarily like Breaking Bad, you know, a duffel bag full of $18,000 in bills. No. Cash is like your bank accounts, like your checking account, your savings account, your whatever you've got at the bank, those kind of accounts. Generally, it's going to be checking. So cash is like your bank accounts. Okay, so we had 18,000. Man, this person is like loaded. So we had 18,000 and we're paying $350 for this car lease payment. All right, well that's gonna take us over here and do expenses, and I haven't changed these yet to go along with this problem. So let's do that. I'm looking at page 17, and I see 1, 2, 3, 4, 5, and I don't have 5 here, so I'm gonna have to play around a little bit. I'm gonna do this, and that will help me with my breaks in between accounts. Did I get 5? 1, 2, 3, 4, not quite. Let's see if I can squeeze them in. So I'm looking at page 17, and I'm going to use this line up here. I am not a fan of typing, so I don't have to type expense. I can just go over food and change it to automobile. Page 17, the next one is entertainment. Changing right up here in the formula line. Entertainment. Next one is groceries. Food would be fine, honestly, but I am going to change it to groceries so it matches this problem. And then we got interest. And all along I want you thinking, okay, which one of these do we want for number 1 for that car lease payment? And travel's the last one. So I got travel expense, interest, groceries, entertainment, automobile. We need one of those yellow guys, one of those expense accounts for car lease payment. What do you think about that? What would be what seems like the best one? Car lease payment. What kind of an expense is that? It definitely could be automobile expense, right? That sounds close. Entertainment, no, that's like going to the movies and concerts, and boy, are we ever going to be able to do that again. Groceries, no, it's not that. It's not interest. Travel? I think travel is more like taking a trip, like going on a cruise, hotel. Travel could be you're in a car, but travel's not necessarily a car, so forget about travel. Yes, we want automobile expense. So notice this is an increase on the left, and it's a number 1. So I want to hold off a minute on number 1. Car lease payment, number 1. We decreased cash, that's the right side. We increased automobile expense, that's the left side. The key is we've got a left and we got a right. We balance out left and right. You can do these in any order you want, and it doesn't have anything to do with increase or decrease. It all has to do with left and right. You have to have the same amount on the left side and the same amount on the right side. But you're going to see it's like this one is a decrease and an increase, or maybe I should say an increase and a decrease. I'm making myself crazy already. I'm going to stop right there. It depends. It depends on the account, and it depends on the transaction. So the important thing, the thing you have to do is get your left and your right to balance out. All right, let's look at number 2. Paid $1,000 cash against the student loans, which includes $140 in interest. Ooh, that's a good one. Okay, paid $1,000 student loan, and there's $140 in interest. Okay, this one's great because it's got 3 parts. It doesn't have 2 parts, it's got 3 parts. So this is a good one. Paid student loan, $140 interest. Okay, paid. Paid. Paid is cash. Used cash. Sometimes I say cash is trump. I mean, if you see the part of these transactions that's cash, you got half of it figured out. Paid, decreased cash. That's the amount of the payment. Like in the olden days, you'd write a check out for $1,000. Now it's probably going to be online, computer, check and make sure that payment's doing what it's supposed to do. Paid $1,000. All right, and it has something to do with the student loan, so that's right here. So we're going to be decreasing the student loan. And we've got something to do with, well, they're telling us how much the interest is, and I remember typing interest. Let's get the interest in there. 140. This is transaction number 2. So there's the interest expense. Left side, increase, record, interest expense. Good. And here's the right side. The whole payment is $1,000. So then we got to figure out what to do right here for the decrease in the student loan debt. And some of you might just see this right off the bat, like, oh yeah, I get it. And some of you might just be like, oh my God, I have no idea what to do with this one. It's fine. We're all different. We all think differently. It's okay. So that's part of why this is a great practice problem for us to do together and for you to be able to review, because then you can hear me talk through it and see how this kind of transaction goes. So this $1,000 is the total payment, and part of that total payment is this part is the decrease in the loan, and the other part is the interest on the loan. The total of those two things together is the $1,000. So $1,000 is the total. So I need to find the difference right here, and I'm going to use a formula to do it. Equals 1,000. I'm typing equals 1,000 minus 140. I'm typing that out. You can see it up here on the formula line. Some of you are great with Excel and formulas, and some of you are like, yeah, it's not like a regular thing for me. For this class, I just want you to do it. Just do it. These are not complicated things to do. Just use Excel and get a little bit more comfortable. Wherever you're at, I just want you to get a little more comfortable, feel a little bit stronger with Excel. So I typed in equals 1,000 minus 140, and I get my 860. So for number 2, I've got my 1,000 on the right, and I've got 2 parts for the left. I've got this 860, and I've got this 140. So I've got 1,000 on the left, I got 1,000 on the right. I'm good. Let's look at number 3. Number 3 says mortgage payment $2,400 is interest. Mortgage payment $2,000 with, I already forgot, $400 interest. Okay, so this one's just like the one we did. So number 2 and number 3 are the same kind of deal. So another thing you could do when you're watching these videos is pause it right now and you try number 3. You try doing it. And then come back and play and check and see what I did. Make sure, you're all good. Okay, mortgage payment. Payment. Paid cash. So we're decreasing cash. Got it. 400 in interest. All right. Interest. Whoop. Interest 400. So we've got the same situation where we've got, okay, like right now we're on the fence. We're not done. It's like, we got 2,000 and we got 400 and it's not done. We have to figure out how much we reduced or decreased the mortgage. So this is number 3. I've got equals the payment, the total payment, minus the interest to figure out how much we're reducing the mortgage. This is called a principal payment. So $1,600 is the principal payment. It's how much we're reducing the mortgage loan. So, and yeah, this is how it goes. Every time you make a payment, car payment, mortgage payment, whatever, some of that total payment is going towards your loan. That's the principal payment. And some of it's going towards interest. So it just depends on the terms of the loan and all that. But a lot of us have those payments. So let's do the same thing. Let's check and make sure this one's okay. So number 3 on the left, I've got a 1,600 and a 400. So yep, I got my 2,000 on the left and I got my 2,000 on the right. So my left and my right are all good. All right, number 4. $4,800 from salary earned was directly deposited to the bank account. Well, if it wasn't direct deposited, we'd go and take it to the bank, right? So, okay, salary. Man, who is this person? $4,800 salary earned. I want to know this person. Maybe that $250,000 house has a pool. Okay, $4,800 salary earned. And in the book it says, and deposited to the bank. Maybe I should add that. Deposited is a trigger word. So when you see deposited, that's cash. That's the bank. You know, this money was deposited in the bank. Increase, deposit, cash receipt, more cash, deposit, increase, 4,800. And then we got to decide what to do with salary. Salary earned. I like that they use the word earned, because earned is revenue. Revenue is earned. Those are the same kinds of things. So salary earned for a person, in chapter 1 we're doing, this is a person's financials. It's going to go right here. Revenue for that person is what did that person earn. This person earned $4,800 and it's going in the bank. I gotta figure out how to turn those little things off. So check your left side, $4,800, right side, $4,800. Okay, and we're ready for the last one, number 5. A family member accepted $2,000 worth of jewelry as repayment of the family loan. What? Okay. I'm just going to type it out because this one's really interesting. Family member accepted $2,000 in jewelry as repayment. Repayment of the family loan. Well, this is an interesting family. 2,000 in jewelry. Okay. So take a minute and look at this one. Think about this one. Family member. Family member is not this person. Family member is somebody else. Accepted 2,000 in jewelry. The jewelry is from this person. And we're going to repay the family loan. Remember the family loan? It was like, what's that all about? And over here we've got house. We got valuables. That sounds like jewelry. Furniture, no, that's not jewelry. Cash, no, that's the bank account stuff. So we want valuables. Valuables is going down. 2,000. We're taking $2,000 worth of jewelry and giving it to this family member in exchange for the debt. Let's get this one in and then we can kind of talk about it in a minute. So valuables is decreasing. Jewelry's going down, decrease valuables and electronics. And this debt is going down, this weird little $2,000 family loan debt. It's sitting at a balance of $2,000 and we're decreasing it by $2,000, so this is all paid up now. You know, we're square. Interesting transaction for chapter 1. Personal accounting. I love it. Family member accepted jewelry. That's here. Repayment of the loan. That's here. Check your left and your right. Oops. Left and right. So for number 5, you know, functionally we got a 2,000 on the left and a 2,000 on the right. So we're good. I'm going to add a little section here. Steps. We did the opening balances first, and then we recorded the transactions, and now we're going to do the totals. So there were really 3 kind of separate things that we're doing with this practice problem. So remember when we put in like the 18,000 and we did all that, the beginning balance stuff, and I did this extra thing down here. I was just playing around like, hey, let's do this balance sheet equation and make sure it all ties up, all that. And then we did this stuff. We went through the 5 things that happened, the 5 transactions, and recorded those in accounts. And now we're going to finish off with the totals. And I'm going to do a little bit more with Excel. We need totals where it says ending. We need to do all those. And we need to do these gray boxes at the bottom. You're going to do the same thing with your case study. So let's look at cash. Cash will always be the most active account where you got the most going on. And I'm going to use a formula here. I want you to use a formula in your file. Equals, click, plus, click, minus, click, minus, click, minus, click, and enter. Should we go across? Yeah, let's go across. Student loan debt. This is right side. Equals, click, minus, click, and enter. Look at this one. It should be going down, right? We made a payment. We owe less. So it's going from $39,000 to $38,140. Yes. Look at revenue. There's only one thing there. Don't type it again. Equals, click. Super fast. Expense. Equals, click. Furniture. Equals, click. Well, I should say it's equals, click, and enter. Family loan debt. Equals, click, minus, click, enter. And yeah, it should be 0, right? That's all paid off. Entertainment. We didn't have any entertainment, did we? I'm just going to put a 0 in there. Groceries. Why did they even include those? I don't know. Okay. Valuables. Equals, left side, that's the plus side, minus, right side. Okay, good. Debt. This is a right side account. Equals, right side, minus, left side. Hey, take a look at mortgage loan debt. It's going from $100,000 to $98,400. That makes sense because we made a payment. It should be going down. And let's finish it off. House, net worth, hold that thought. Interest, we're going to add. Check this out, 2 on the same side. That one plus that one. Travel, again, why did they even include that? Okay, so, now we're going to finish in net worth also. We're going to finish all this ending stuff down here. Okay, we're going to do revenue and expense first because I want the surplus, which is going to go here, which is all going to go here. So, revenue equals, scroll, click up to total revenue. So I'm doing equals, scroll, click, enter. Expenses. I just have a couple things to add together. So expenses, click right where you want the total to be. Equals, and scroll on up. We got this one, 350, and then click on the 540 and enter. Pause. Notice the formula line. Here's that formula, P26 and P50. Revenue minus expense is the deficit. Revenue minus expense equals net income. So 4,800, click on that one, minus click on that one, and we've got a surplus. This over here in net worth, it says net income, really, that's really chapter 2. This should really say surplus deficit. I'm going to make it small so it fits, sort of kind of fits. And the surplus or the deficit is a surplus, it's a positive number, it's this one, so equals 3910. Then I can finish off net worth. And honestly, in chapter 1, they don't really show you all of this. We get to it in chapter 2 and beyond. I'm kind of adding a little bit right here, honestly, in this practice problem. So we did revenue, expense, the difference is the surplus. Revenue, more revenue than expense is a surplus, excuse me. If we had more expense than revenue, that would be a deficit. Got the surplus, that's going to affect my net worth. I'm going to add that in, so net worth is increasing from 138 to 142. And this is where, like down here, we're going to kind of hold our breath and hope it all works out. Assets equals, let's add them all up. We got this one for cash, plus this one for furniture, plus this one for valuables, plus this one for house, and enter. Liabilities equals this one for student loan, and I mean, you don't have to, that's 0. I'm going to go ahead and keep going. And this one, we've really got 2 debts now. So that's what we got for liabilities. And net worth is just that one number. And then over here, I could do that little comparison like I did. Because these two have to add up to that 276,350. And they don't. Well, it's probably because of the surplus. Let's take that out. No, that's not it. So, this is like a real live situation. Let's see what happened there. What's the difference between these two? Am I missing something? $2,400. We're going to pause right there, and I'm going to check this out. Alright, I figured it out. It took me a minute, but this is actually great because I just made a typo, and you could make a typo or have just an honest mistake. So I'm going to show you what I did. Because it's 2,400, it made me suspect this 1,200. Something was goofy with that one. 1,200 is cell C42. It should be added in total assets. So I come down here and I'm looking at this one. I'm like, yeah, it's right there, C42. Oh my gosh, wait. Do you see there's a plus and a minus? Yeah, like I hit my keypad and no, it should just be a plus. I'm adding those 4 asset accounts together. So that was a typo. I thought I was hitting plus, and I actually hit 2 keys. I hit a plus and a minus, which means in terms of mathematics and whatnot, it was subtracting. I don't want that. I want to add those 4. So I want to add those 4. That gives me my 278,750. Yes. Yes. I should balance. Assets equals liabilities plus equity, or in this case, equity plus net worth. So we're good to go. We did our steps: opening balances, we recorded transactions, and we got our totals in. We did all 5 transactions. We did all of these beautiful accounts. And we got everything to balance out. So you know how at the end I was out of balance and I was like, like, what's up with that? You know, try and find it yourself. But if you can't find it, send me your file. Say, hey, Suzanne, email, will you take a look at my file? And, you know, everything's great except this one total at the bottom. I mean, tell me what you want me to look at. So yeah, you can send me your file, you can send me your questions, and I'm really happy to work with you and help you out. So that's the end of our Chapter 1 practice problem. I look forward to talking to you more in class.